Welcome back to the channel, everyone. Today I've got some brilliant news for AMC. Finally, rule nscc 2021-010 has been confirmed. The SEC are actually investigating Citadel, and the street actually has a very bullish AMC article for potentially the first time in existence. So stay tuned and let's make some money. But guys, before I dive into the video, I just want to give a massive shout out to all of the new apes that have just joined the Patreon and the private Discord and became part of the team. We've been having a great time. I've been providing them with urgent AMC updates, and they're in with the chance of winning $600. So if you want somewhere where you can chill out, get urgent AMC news, and win $600 on the 28th of August, then join the Patreon and the private Discord, linked in the description below. And as always, guys, if you haven't already, be sure to drop a like down below, subscribe to the channel, and ding that notification bell so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, Rule nscc 2021-010 filing has been confirmed for August the 23rd. The proposal essentially prohibits the use of naked shorting and failure to deliver in the market. In this letter, FINRA confirms to file the ruling on August the 23rd. Effective date is the 24th, the day after, which gives us the 25th, 26th, 27th, 30th and 31st in August of effective ruling. Just a quick reminder, Rule 010 was the rule that establishes the Securities Financing Transaction Clearing Service, or SFT Clearing Service, to make central clearing available at NSCC for equity securities financing transactions, which are, broadly speaking, transactions where the parties exchange equity securities against cash and simultaneously agree to exchange the same securities and cash plus or minus a rate payment and interest on a future date. This was the first ruling that actually mentioned naked shorting. The NSCC understands that SFTs provide liquidity to markets and facilitates the ability of market participants to make delivery on short sales, and thereby avoiding failures to deliver, naked shorts and similar situations. This is also going to be the ruling that effectively implements the controlled market crash, not the controlled AMC squeeze, but the controlled market crash. When that major market does occur and AMC squeezes and other equities start falling because hedge funds are having to sell off their long positions in order to buy back the shares for their AMC short positions, it effectively puts it into place so that all of the other equities in the market, all of the other stocks in the market, don't all crash at the same time. Instead of these hedge funds having to sell off their long positions to cover their short positions, or instead of selling off their long positions when they actually get liquidated, they can effectively exchange these long positions for cash in order to buy back their AMC shorts. That way, if they're forced to exchange their long positions with a different hedge fund or a different institution, they don't have to sell off billions and billions and billions of dollars worth of Apple, Netflix, Tesla, Amazon, and other stocks that would cause a much wider market crash. Now, a lot of people have commented saying, well, Tom, what stops them from just taking all this cash and adding to their AMC short positions instead of covering their shorts? When the wider market is falling and AMC is squeezing, these hedge funds are going to get liquidated. When a hedge fund actually gets liquidated, they don't have a say in the matter as to what they do with their own assets. It's no longer under their control, and it's controlled by an accounting firm that organises their liquidation. Therefore, they can't choose to take this cash and add it to their short positions, because effectively all their bank accounts get frozen when they're liquidated, and the accountant comes in and takes over their bank accounts, sells off their long positions or exchanges their long positions, and covers the short positions. Effectively, these hedge funds won't have access to their own bank accounts because they'll have all of their assets frozen. This is also great news that it's confirmed for the 23rd of August, and it's going to be going into practice. The effective date is the 24th of August, which is the very next day. It's not going to take 45 days or 60 days or 90 days to be effective after confirmation. It's literally happening one day later. Clearly, the DTCC and the NSCC realise the urgency of this new ruling, and they realise the urgency of the incoming market crash, and they need to be prepared, and therefore they can't wait another 45 days or 60 days to implement this ruling. It needs to go into play right now. We've also got some other brilliant news from Jackson Hunter, who tweeted saying, for those that didn't believe the SEC has been investigating, many activities going on simply cannot be spoken of during an active investigation. Jackson actually submitted a request to the SEC for all of Citadel's data or all filings on Citadel when they have been fined in the previous 10, 15 or 20 years. He actually just received a response from the SEC, and this is what they said. This letter responds to your request dated May 1st, 2021 and received in this office on May 3rd, 2021 for any documents where Citadel Securities is the subject of or one of the subjects thereof. You also submitted a request for expedited processing with this request. By letter dated May 5th, 2021, our office rendered a decision on your expedited treatment request. We are withholding records that may be responsive to your request under this ruling. This exemption protects, from disclosure, records complied for law enforcement purposes, the release of which could reasonably be expected to interfere with enforcement activities. Basically, the SEC is saying that they cannot disclose this information that Jackson has requested because it could potentially impact law enforcement activities. Since Exemption 7A protects the records from disclosure, we have not determined if other exemptions apply. Therefore, we reserve the right to assert other exemptions when Exemption 7A no longer applies. It is the general policy of the Commission to conduct its investigations on a non-public basis. Thus, subject to the provisions of FOIA, the Commission does not disclose the existence or non-existence of an investigation or information gathering unless made a matter of public record in proceedings brought before the Commission or in the courts. Accordingly, the assertion of this exemption should not be construed as an indication by the Commission or its staff that any violations of law have occurred with respect to any person, entity, or security. I am the deciding official with regard to this adverse determination. You have the right to appeal my decision to the SEC's General Counsel under this ruling. The appeal must be received within 90 days. So basically, the SEC cannot disclose information about Citadel's fines to Jackson because the SEC are currently investigating Citadel. This is absolutely great news because we already knew that the SEC was investigating AMC, but they're going even further and investigating the hedge funds that related to the AMC and GameStop fiasco back in January and now again back in June. This is also an ongoing investigation that the SEC have not concluded yet, and therefore hopefully in due time Gary Gensler and the rest of the SEC will be bringing down the hammer on Citadel. The Street also posted this very bullish article. AMC stock. Dark pool regulation could fuel the short squeeze. Interestingly guys, I wouldn't have even found this article on the Street if it wasn't for my new partner, Moomoo. Moomoo is now my main stock trading platform instead of Webull. Moomoo have got an excellent news feature, they've even got an earnings calendar, they've got the options chain, they've got company fundamentals and figures, a chat room, forum style place where you can talk to other investors, and so much more. So if you do want to sign up for Moomoo, be sure to use the link in the description below to get 4 free shares worth up to $3,350. Recently, SEC Chair Gary Gensler commented that he is looking very closely into dark pools. Wall Street Memes takes a closer look at how SEC regulation could lead to a short squeeze on AMC stock. AMC stock has been moving away from the $40 level in recent weeks, with the company releasing above expectation second quarter results on Monday, August 9th. Many investors are still waiting for a turnaround in the company's stock and hoping for the MOAS, mother of all short squeezes. Lack of transparency in the US markets is seen by the apes as a main factor preventing AMC stock from going to the moon. Wall Street Memes takes a closer look at the case. SEC Chair Gary Gensler, in a recent interview, commented on new market regulations. According to him, the SEC is looking very closely at dark pool activity and intends to promote maximum transparency for all investors. Gary tweeted the removed portion of his interview with CNBC saying we must guard against fraud and manipulation, whether from big actors, hedge funds, or elsewhere. We are taking a close look at market structure to ensure our capital markets are working for investors. The SEC chairman's speech helps to reassure that retail investors are being heard, and that the agency is doing what is necessary to protect them from possible conflicts of interest and lack of transparency. However, and I do definitely agree with this point, many apes received Gary Gensler's speech with skepticism. According to comments on the main Reddit forums, the lack of transparency involving dark pools is quite clear, and the SEC should start to address the issue rather than just observe. The SEC absolutely needs to take action, and I think that is what they are doing by implementing Rule 010 and investigating Citadel. Apes believe that dark pools and naked shorting activities have been pulling AMC's share price down, and that the true short interest ratio is much higher than the current 16% reported by Yahoo Finance. Worth noting, however, that the two massive gamma squeezes, not short squeezes, on AMC stock in 2021, as in January and June, occurred despite the current trading environment. However, I do think it's because this has been getting a whole lot worse since the second gamma squeeze back in June. In any case, AMC's official short interest is still high enough to keep bears at risk of being squeezed again, or being squeezed for the first time, should eventual bullishness turn into a growing snowball, with some hedge funds adding to their short positions and other institutions adding to their long positions on AMC. This suits versus apes and suits battle seems far from over. I personally believe that dark pool regulation absolutely would cause AMC to gamma squeeze and then eventually to short squeeze. If the SEC starts regulating dark pools more heavily and even outlaws the use of dark pools and also ensures that odd lot trades impact on the lit exchange prices, I think that would absolutely drive the AMC stock price back up, causing a gamma squeeze and then eventually the short squeeze. Hopefully now that Rule 010 is being confirmed and going into effect on August the 24th, hopefully then soon after, the SEC will come down like a bag of bricks on top of Citadel and all of those other hedge funds. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!